I know, it's only 70, Cynthia. Somebody, can I delete her? Hello, Marta. Hello, Carlene, everybody. All right, also in Texas. Very cool. So I know everybody's busy this time of year, so let's kick it off. Welcome, everyone, to episode 116 of the Weekly Tax Update. It is March 6th, 2026, and my little theme here this week is springing forward until March 8th. That slide is brought to you by Gemini 3 running Nano Banana 2. I must say it's a much different slide. My usual ChatGPT slides look something like this, because this was a version of the ChatGPT slide for today. But it keeps pointing that arrow. It was pointing an arrow before underneath the other way. It didn't work. So, of course, it got the arrow correct on the reminder, but it didn't get the arrow correct on the actual title slide. Such are the nuances of communicating with AI tools. But just in case you're wondering how we get to these tools, how we get these videos. If you're looking for me, this is how you find me. Scan that QR code. And that will, of course, give you all of my information populated into your phone. By all means, give me a call or text or an email, whatever you need, and however we can help you. A little bit of commercial. The 13th Annual International Tax Conference dates are set, October 26th, 27th, 28th. I promise you that we are finalizing what we're going to cover. A lot of exciting topics. We've got to squeeze that in to 2 days. The first day is the famous Rita Ryan Tax Boot Camp. I highly recommend that as well. As soon as we have it finalized, of course, up will go the registration. Someone is saying they can't see anything in the screen. Everyone else, are you seeing video? No, no one else is saying they can't see video. Okay, I'm going to assume that that's not us. Yeah, all right, everyone is seeing video. Okay, I touched nothing, so you should have been seeing video all along. All right, thank you. Okay. All right, these are the IRS statistics updated through March 6th, I must say. They're getting their statistics out on time. No change in the last 2 weeks on identity theft. I always lead with the identity theft processing because I think it is the most embarrassing aspect at the Internal Revenue Service right now. They are back 22 months, April, May, June, July. No, they're back 20 months. It's embarrassing where they are right now. It should not take so long to process identity theft and move folks along, delaying refunds and all sorts of other issues. IRS is processing original returns sent to them in February, amended returns sent to them in December for Form 1040 series. Of course, everyone will tell you they are not processing those December amended returns because it takes forever to get an amended return responded to these days. Our understanding is that these announced times exclude returns requiring error correction or special handling. Probably should do a FOIA request and ask them how long it really takes to process some of these things. You're hearing 6 months, you hear a year. I don't know. Processing times for business returns. January of 2025 for Form 1120 returns. This has not moved in 6 weeks. That bar has not moved. And keep in mind, business returns were turned on 2 or 2.5 weeks before 1040 series returns. Amended returns are being processed from May of 2025. That is 10 months processing delay. 1041s, same thing. Processing January 2026 new returns, processing May 2025 amended returns. Ouch. I'm discontinuing updates for Form 941. It doesn't make sense. We talked about this before. And it simply doesn't make sense to hear that behind, then all of a sudden in April, they start processing the quarterly reports and bang, they're caught up. Now you're updated on Forms 941. So we won't be talking about that. Form 2848, Form 8821 have both moved the bar from 2 days to 4 days delay in only a week's time. We didn't have a federal holiday. I think this is a bad trend. While 4 days is acceptable, especially after some of the historic issues, they've always said a 5-day turnaround, at least before some of this automation and the upload. 5 days was always their standard, which was probably acceptable. We going from 2 days to 4 days isn't so great. I think we've gone in the last month 2 days, 1 day, 2 days, now 4 days. I don't understand that. Again, there wasn't a holiday in the last week. Specialized applications, nothing updated here. I think they're all within acceptable parameters. The W-7s are being processed pretty much upon submission in Texas. Form 8802 residency certificates. The needle hasn't moved from December, but they get a huge amount of requests in late December and early January as the new year comes into play, right? Everybody needs that 2025 certification. So I think like everything else, it'll be delayed for a while, but very quickly it becomes a current processing issue. Give it another 2 or 3 months. SS4s, I've said this before on the fax submissions, 6 days. We call them after a week to the day, have that power of attorney, and we usually get the number. So whatever the answer has been on fax submissions, we find we can call in a week and get it. The general correspondence needle has not moved in a week. No movement this week. Some of those numbers haven't moved in maybe a month. I haven't really been tracking until now. We're going to start seeing how long it takes for the needle to move on some of this stuff. And we've already said, just file electronically, do things on the website, whatever it takes, phone, email, website. All right. So someone mentioned this in the chat, and I'm going to lead off with it. Oregon is recognizing the EA credential. Very, very good. Win for everybody in the country, mostly. Let me talk about why I say mostly. The Senate passed this. I don't know why this got it's out of line now. So the Senate passed it in February 24th. The House passed it in this week and sent it to the governor. It's awaiting the governor's signature, and the governor is expected to sign it. It will then take effect 91 days after the legislature adjourns. So what this does. So we'll talk about the past in a minute. We're taking away the Oregon State Consultant exam for EAs. The federal credential is now going to be enough. Oregon's going to be happy with that and not make EAs take a state-specific education burden. That's very, very good. But there's some better parts. EAs can hire and supervise employees. Finally, that's been the number one holdup, is that you needed to be a CPA to hire people. Now an EA can hire non-credentialed people to do work for them, touch tax returns. A registration fee is going to be set by the Oregon Board of Tax Practitioners. Details are forthcoming, but let's talk about this for a minute. So we've had all sorts of folks. This is now a registration and not a license. Now, on the one hand, so many folks were not registered in Oregon. Now, I took the test. I became a licensed tax consultant, partially to see what the process was, because my friend Ed Moore in Oklahoma had brought this to our attention, that H&R Block was not allowing the franchisees to share data about Oregon returns unless they had licensed practitioners. So we started talking about this 2 years ago. I got licensed because I wanted to see the process and talk competently about it, and I'm still an LTC. I guess I won't have to renew because it's going to go away. But now, what's going to happen to anybody who does a return? Are they not going to allow you to file an Oregon return without an Oregon preparer number? I think so. And that's going to mean you're going to register and pay them a fee. So they're going to collect more revenue and do little or no work other than ensure you are a licensed credential. The good thing here, Oregon formally recognizes that all of the demands and requirements to become an EA, long overdue. We affirmed and expand the role of EAs serving Oregon taxpayers. Fabulous. Hopefully some of the practitioners who don't have enough help and some of the Oregon folks that we've talked to who don't have difficulty finding a preparer, this won't happen overnight, but it's going to help a great deal. Out-of-state EAs don't have to face the costly, time-consuming requirement. They also, but of course, have to understand how to do an Oregon return. So maybe that's a little overstated, but to have to understand it to do one. But we can now all help Oregon residents. And now, is this a potential shift? Are other states watching, and will this encourage other states to let EAs practice and not have some of these license restrictions? Most notably, California. I don't think California is going to change, but they actually recognize EAs just a little differently. So how did this happen? NAEA and the Oregon Task Force. They pushed this forward. They did the advocacy. They got it passed. A number of EAs, a number of other folks testified. I submitted written testimony. Donna Byrne, who a lot of us know, submitted video testimony, did live video testimony. And these are the things that were taken into consideration in their legislature passing this. And of course, Meg Killian, who's executive director of the NAEA, really coordinated all of this and got this to happen. So I will say this, I told everybody to go get licensed. Okay, I think this is a better approach. I'm glad it happened. And we all should be too. It'll be interesting to see what happens forthcoming in the next year, but you'll have the ability to practice with Oregon clients, not have to worry about getting a penalty. We're waiting for guidance. We're waiting for fee and registration information. And then all of this will become effective. So the law itself becomes effective 91 days from when the legislature ends their session. So this is going to be happening over the next year. We'll keep you updated about what's going to happen. So we're going to watch for the guidance. And hey, if you were avoiding Oregon work, you no longer need to. So there's all this talk about both from naysayers and from folks that think AI is here to save our profession. There's a study, very interesting study that came out. So Anthropic, the company behind Claude, the company that told the Pentagon where they could go if they planned to use their AI tools for weapons or military things, or no, not actually, that's a lie. If they were going to use it for mass surveillance. They just published some labor market research telling us, unlike other studies, this one's the first one to look at the actual real world impact and measure what AIs are doing to certain occupations and certain tasks. We've had all of this pie in the sky talk, but Anthropic is saying the jobs most at risk are not the ones people are expecting, that the media is touting. If you thought disruption was someone else's problem, maybe it's our problem. So previous studies asked, could AI theoretically do insert name of job or task here, usually the job? Result were these broad speculative exposure estimates with limited real world grounding, right? Oh, coders are going to go away unless they upskill themselves. Tax preparers are going to go away. So now the study is asking, is AI actually doing this job now? So Claude has a number of different tools. So primarily they're using Claude. And Claude mapped 20,000 specific work tasks in the Department of Labor's ONET database. They drew 1 million anonymized real-world conversations. And now they came up with what they call observed exposure, the theoretical capability filtered through actual documented usage patterns. So what are they finding? Well, in the past, research said that 94% theoretical potential of all computer mathematical tasks that AI could accelerate, 94%. But in actual practice today, it's really only 33% of the tasks are being performed by AI in real world usage. Now, we're nowhere near the top. It's not whether disruption is coming, it's how fast the gap is going to close, how fast the automation is going to close. Right now, there's a 61% spread between what we thought it could do and what it's actually doing. Let's see how we get there and how quickly. So, computer programmers are probably the most exposed. Customer service reps, 60% of those tasks are currently being done by AI tools, chatbots, phone bots. Sometimes you call and you're talking to someone, turns out it's an AI tool. Data entry, 60% of tasks are currently covered. Financial analysts have a high observed exposure. My experience when we talk to different folks, especially first-year folks that used to spend a lot of time reading and writing reports, they're still doing that, but they're using AI tools to make it happen more quickly. AI tools let them filter information more quickly, let them finalize reports more quickly. For anything that's standardized, it does a much better job inserting into the final report for them. Market researchers appear to also have high observed exposure. That's the next segment maybe that's going to see job losses. So what's the lowest exposure? Anything with a physical or perceptual roles. This is where we want it. This is where we're going to come in. Jobs that require physical presence. If I'm going to sit here and do a tax return with you, I don't want to do that anymore. A hands-on skill. I'm going to fix things for you. Or complex real-world perception items. Cooks and culinary professionals, although Captain Picard always said tea Earl Grey hot, and he got it. And he could program, if you remember, they could program the replicator, right, to make food. Mechanics and skilled tradespeople. Someone once told me that outsourcing was never going to impact appliance repair because it doesn't matter what it costs to repair an appliance in India when your refrigerator is broken in Manhattan. Lifeguards, first responders, policemen, firemen, bartenders, and hospitality workers. Well, I think a computer could replace my bartender. The common thread, though, is that AI can't replicate anything that requires human judgment in physical environments. Certainly not yet. There was an image that I couldn't find again in the New York Post of some robot they were testing that was shoveling snow in New York City. So these things are something you want to pay attention to. Advanced degrees and specialized credentials. The people that invested the most in learning might be the most exposed, some of us. Older workers, those with deep domain knowledge built over decades of practice. Well-compensated folks, high earners whose labor cost creates the strongest financial incentive for a firm to try and automate it, or at least automate parts of it. Anybody who's office-based, what we used to think of as knowledge-based workers. No one's going to outsource knowledge-based workers. We need smart people here. If your entire workflow is already in documents, data, research, and communication, that can probably be replaced by AI, or most of it can. 10 people can be whittled down to 1 or 2. So traditionally, automation story was about low skill, low wage jobs. This is fundamentally different and is playing out right now in tax practices. I didn't add this slide, but we could have two quick thoughts. Burger King has an AI they've rolled out called Patty. It's kind of funny, right? Burger King Patty. Patty is a tool that exists in listening to drive-through orders. And if the human taking the order doesn't say please, thank you, and other things that the article didn't define, which I imagine are, you forgot to round up the order. Did you want fries with that? Do you want to supersize that? The AI tool will remind them. McDonald's, Bloomberg reported, that has 70% of its orders through the drive-thru. Bloomberg is rolling out AI ordering completely in the drive-thru. Now, Fred Stein, our friend, Fred Stein, EA, CPA, has told us that in Southern California, he's already experienced it. It got the order correct. He wasn't even sure that it was AI, right? Put the order in, roll it up. Now, what's that going to mean eventually? Well, if I enter my order with my phone, I pull up and I tell them my order number is H123, is the AI going to say, you know, John, the last 4 times you were here, you had fries with that. You forgot to order a large fries with this order. Would you like a large fries? It's only $3.99 or 2,000 points. It's going to be interesting where these tools go. So we're in a high exposure zone, but I'm going to show you something else at the end that's different too. So when we look at the profile of the most exposed workers against the daily reality, what happens? Tax is fundamentally the application of specialized knowledge, exactly something that AIs are demonstrating their deepest real world penetration. Tax work is document intensive. You should see this place. I got papers all over the place. We're high volume in some cases, but very structured document processing. This is something AIs can do. Research and analysis. I use AI tools. I use both BlueJ and Accordance and some other things. They cut down the amount of time we spend researching. They'll really write the memo. They'll do a good first draft, or they'll review my memo from it. Because you don't want AI writing sounds like AI writing if you look at enough of it. You don't want that to happen. So these are the things where AI is observed. AI usage is observed at the highest levels. Some of the bigger firms are rolling out a lot more AI tools than what all of us are using. By the way, AI also works with pattern recognition and client communications, drafting responses, summarizing findings. We do that. We've tried to get some tools to do some things. I'm really trying to get the tool to write the explainer letter to people about the difference between this year and last year. It never quite gets it right, although it does a good first draft. But we're trying to get a prompt, get a Gemini tool a gem that we can share out that's going to do that. We did roll out a tool. Well, we have a tool available. I didn't roll it out. That takes your engagement letter and makes an awful lot of suggestions to it. So I got to get that ready for prime time at some point. All right. Now, not everything we need. We have a Trump account update. This is not everything we need. But the regulations just dropped. They weren't the complete regulations. March 9th, we got the regulations on, we got the regulations on the account structures and elections and the pilot payment contributions. They didn't give us the regulations for the rules under 530A-2 through 530A-6. They reserved those sections. That's a lot of sections. So there's a lot of stuff coming. Contributions, investments, distributions, and reporting. None of that is finalized yet. So we have a lot to learn. I promise you this is not going to be about Trump accounts. Just a couple of new things we gleaned out of looking at yesterday's drop on the regulations. We already know when the beneficiary reaches 18, the IRA account is going to transition to a standard traditional IRA under Section 408. All the traditional IRA rules are going to apply. Prohibitions continue on this. Beneficiary, this is a step in the simple. The beneficiary will take direct control of the account at age 18. So it's going to be a restricted savings vehicle with money out. Hopefully these people see large amounts of compounded growth in them. We already talked about the contribution rules. I stuck this in here in case you need it as a reminder. So I'm going to talk about a couple of things in a minute. The regs address rollovers. The entire balance can be rolled to a new Trump account from a trustee to trustee transfer. You can only have one funded Trump account at any one time. So you're not going to have, I have this at Fidelity, I have that at Vanguard. It's got, one account, one place. That's all you're allowed to have. You can roll the account over to an ABLE at age 17. So if they are disabled or become disabled, You don't need to worry about trusts. You don't need to worry about the child losing benefits. You can roll that balance over into an ABLE account, which is a pretty great idea to be able to do that. So 529A says that they can do that. Now, the rollover account has to be funded first. So a rollover Trump account must receive the rollover amount before accepting any other contribution. Again, we said you can only have one account, right? So if I open a new Trump account at another provider, I got to roll the other money over before I can add to the new account. So Section 6434 pilot program contributions, we have some guidance on this now in the proposed regs. We already knew that there's $1,000 per child. This doesn't count child under the age of 5. A new child born in 2025, 6, 7, 8. Now, the regulations suggest that this money will be protected from offset. You're going to see in a minute why. So when we put that $1,000 in, it's not subject to the Treasury offset program, liens, levies, or other debt collection. That $1,000 pilot money is going to go into the account. We already know the $1,000 isn't automatic. They have to file a formal election. You miss the window, you're not going to get that money. So we want to file that return year of birth, check that box. Now, there's a distinction between Trump accounts under 530A and the pilot program under 6434. I hadn't thought of this. So we already knew pilot is only for year of birth the next 4 years. Anybody, though, can open a Trump account. To get the pilot money, it's required that they're a U.S. citizen. Under 530A, you can have the Trump account. It doesn't matter if you're a citizen. Social Security number is required in both cases. And there's a qualifying child relationship under the pilot, right? And there's those 4 that break down that it's the guardian, then the parent, then an adult sibling, right? There's a whole breakdown there to make sure that only one person, if more than one person opens the account, we know which one is the account. So this was so silly if you read through this thing. They created a special tax year for these newborn children to make this $1,000 work legally. So the Treasury had to deliver the $1,000 without waiting for the end of the year. They wanted to drop it now. So they created a fictitious tax period, a fictitious tax year that arises and closes instantly upon processing of your request for the pilot payment. That special taxable year has a zero tax liability with a $1,000 refund that you have elected to defer into the Trump account. It's amazing. 6611A. No overpayment interest either. Just going to pay the $1,000. So the regulations also tell us about who's going to get to be a trustee. So anybody that's already a bank that qualifies as a bank, any bank, U.S. or state chartered bank, is automatically an IRA trustee under 408(n) if they want to be so. Non-bank trustees are not afforded that same privilege in the code. So any IRS-approved non-bank trustee as of the end of last year is automatically approved to serve as a Trump account trustee, but they have to opt in. They have to notify the IRS in writing to become one, to be able to take money. Anybody after that date is going to have to request specific authority. They're soliciting comments on how big the non-bank trustee needs to be in this case, and probably the entire processing time frame. But none of us are planning to be a bank or a non-bank trustee, I think. I specifically searched for this. When I didn't find it, I dumped it into 2 different AI tools and said, please help me find this. We have the problem where because contributions to a Trump account cannot be touched under any cases or circumstances before that child reaches age 18. It's a gift of a future interest, and it's going to require a gift tax return if by the U.S. person giving the money into the account. So neither one of these proposed regs addresses it. But we did say 530A sections 2 through 6 are still available. They're going to get to this, we hope. 2503B talks about the gift of a future interest. So a grandparent contributing $5,000 might be making a fully taxable gift, certainly a fully reportable gift. I think most people that are going to utilize Trump accounts are going to give away less than $15 million during their lifetime and at death, right? So the issue really here is that the filing of the 709, right, to take that $5,000 off the unified gift. And someone had said in one of the social media posts somewhere that so potentially I'm gonna put $5,000, which would be a big donation, and have a $500 tax preparer bill for a 709. The answer is maybe, right? Now, we've looked elsewhere. Congress explicitly resolved the present interest gift tax problems in 529 plans. You can find that at 529 little c2. And for able accounts, they did not yet create this provision under 530A under the Trump accounts. Now we have room, right? We know what the code sections are going to be, right? 1.530 cap A-2 through -6. They're reserved, they're open. Maybe somebody's going to one day write something to put in there. Not yet. The $1,000 gift tax issue $1,000 payment has no issues because it's coming from the Secretary of Treasury, not a private donor. And actually, there's something written that seems to cover Michael Dell and anyone else who wants to put money in. It has to be, we kind of knew this was how it would work. It has to be a broad-based group. You have to cover everybody. So Dell's saying everybody under the age of 10 that asks for it will get $250. That's excluded from gift tax reporting. Well, what do we do now? Well, we've been opening them for children, especially for newborns. We've been opting everybody in, checking the box. We don't think anybody should be putting in family contributions yet. If there's free money out there, anybody wants to give you money, Bank of America, some of these employers want to give their employees, kids money, you don't file the gift tax return. Any open issue, compliance issue here is going to be a them issue, not a you issue. If you put money in, you have an issue. So we're holding off on family contributions. So there might be some 152C uncertainty. Who's a qualifying child here? But again, for divorced, separated, shared custody arrangements, who makes the election? I guess that kid should really have that problem that so many people are worried about them having a Trump account. I hate these conversations. We're going to have to, even if they have a social security number, you're going to have to specifically ask if the child is a U.S. citizen. Sorry, we have to do that. At least with respect to the pilot payment, right? They can still open the account. They just won't get the $1,000 pilot payment. I'm unsure about the Michael Dell account. I don't think Mr. Dell said you have to be a citizen, but we could go back and read what's been posted. So, what's still to come? 1.530A cap A-2 through -6. Contributions, investments, distributions, reporting, coordination with the IRAs at age 18. All of that is to come. We're hoping to get gift tax clarification. There's no Section 128 guidance yet if the employer wants to put money in. We already know that employer programs have launched. Whether this becomes a tool for us to recommend to our clients, we need to see the guidance that's forthcoming. Rollover instruments, that's still to come. I don't know that that's going to be an us issue, a tax professional issue. I think that's an issue on the institutions who will be handling this, and they're handling this for 0.1%, 0.1%. That's about a third of what Vanguard, the low-cost provider, gets for managing their ETFs. So we'll see who really lines up to do these things. Final regulations are due within 18 months of the enactment. So that's January of 2027. Not that far off in IRS regulation land. So there's open comment periods here, and I thought this was interesting. On the 530A regulations, this usual 60 days from publication period is open. But for 6434, which is the pilot payment, they only want 30 days open. First, I think it's because there won't be a lot of folks that are going to talk about it. It's only be the big institutions that are going to submit written comments. But also, they're running out of time. They got to fund these things and starting in July. So you might want to take a look at these. If you have anything to write, take a read of these, the rulemaking. And then if you want to comment, you can send an email comment in. The information is in there. I want to remind you that they do read these things. Practitioners made a difference in 2015 when the the capitalization rules came out, the repair and expense rules came out, because we all said $500 was a good start for an immediate expense, but for a de minimis safe harbor, but $2,500 would be better. And what happened? They came back and accepted $2,500. That should be increased, indexed. But yeah, so that came from us. The movie Serenity came from all of us complaining that Fox canceled Firefly. So remember, your voice matters. We probably want to focus on the issue about gift tax treatment, how much a 709 costs, and what a burden that would be on the small taxpayers that they expect to use these accounts. More importantly, if these are folks that are self-preparing, they may not even know they need to do a gift tax filing. So it could be super important here. That's the comments I plan to make. I haven't had a chance to even think about them yet, but maybe over the weekend I'm gonna come up with something that I want to write. So let's go back to AI, and this is a slightly different take on what we talked about earlier in the program. What happens when consumers use AI for tax questions? NerdWallet published something in earlier in the month that got picked up in the New York Times. So what did they do? NerdWallet's a website, if you don't know what it is, and Ellie Jones pointed this out today in a Facebook post. NerdWallet did the following methodology. They took ChatGPT 5.2, Gemini 3 Flash, and Perplexity, and they gave it 7 real-world tax questions. Each question was preceded by a prompt specifically designed to isolate the chatbot's reasoning from prior conversation context. So just like you told it, you're a brand new AI, forget anything you know. They took 3 questions from the C exam, good for them, right? The special enrollment exam for enrolled agents. And 4 open-ended questions such as, I've never filed taxes before, what do I need to do? Why does this matter? Well, first, AI isn't coming to take your job away. Of course, we're arguing with clients who are using stuff with AI. I had an argument with my sister over 40% bonus depreciation. And I said, it's 100%. And she said, no, that went away. This is a person who owns a lot of real estate. And I said, no, it came back a year ago. We discussed how AI isn't currently updated. Anyway, the tools in this study are the same tools our clients are using, right? They have it in their phone right now, and they're haunting us with this stuff. Now, Elon Musk said recently, publicly, Grok can help with your taxes. Influencer level endorsements are actually steering people this way into AI, right? If Elon said so, it must be true. 37% consider AI over a pro. Consumers' trust in AI for taxes sits at 37%. It's down from 43% last year, but a third of our clients trust the AI and are going to probably fight with us. They'll have answers before we do. The clients arrive with AI-generated answers in hand. The critical question is, are those answers right? I saw a practitioner do this at the CSEA forum. They've got those. CSEA has like the old IRS forums, two rows separating 3 rows of seats, and when you walk down that row, there's a speaker you can stand at and you can ask your question. And this person held up his phone and said, "Now, I asked ChatGPT, and ChatGPT doesn't agree with you." I was mortified. Speaker handled herself very well. I was impressed. Just rolled with it. But that's what we're dealing with. And thank goodness you can tell when, at least I can, when they email me something. Even if I don't know the client that well, I can look at it and say, "You've got to be kidding," because it's all AI. So AI is going to look at tax law pretty well. General rules, filing deadlines, standard deduction amounts. Of course, you and I would know to prompt it, "For my 2025 taxes being filed in 2026, please answer." I think our folks are just typing stuff like, "When are my taxes due?" Well, it's going to tell them April 15th. Of course, if they're an S Corp or a partnership, they're going to get the wrong answer. AI also can explain complex things into easy to understand language. That's a good service as well. Of course, you and I know to tell the AI, please write for someone who with a 8th grade education who has not doesn't speak English as a primary language. But if you don't tell the AI that, it may not do that very well. AI math, we know calculations are faster and as accurate as what we do, maybe more accurate. And if it's uncomplicated, often an AI can give us step-by-step guidance. Help me sort out this. I need to go to the California DMV and change my address. What do I need to do? How do I do that? It'll break it down step by step. AI does fall short a bit in complex calculations. I'm not going to ask it to calculate the moonshot for me, at least the off-the-shelf AI. We'll talk about that in a minute. Now, hallucinated citations. AI continues to invent non-existent cases. Judge Holmes just had someone before the tax court. We've talked about that, where the fellow had hallucinated cases, didn't exist. And a couple of times the cases existed, but they didn't cover what the brief said they did. And in at least one case, it was completely hallucinated. It didn't exist. AI understands rules, but it doesn't understand the nuance, the gray area, the quirks, and the different edges of reality. Phase outs, multi-part returns, it gets these wrong, struggles with it. It certainly is struggling with the one big, beautiful bill and anything else that comes up in 2026. Why most AI is updated through ChatGPT is updated through August of 2025 on general knowledge. Now, don't get me wrong. If you tell it, please include the one big, beautiful bill, HR1, be sure to check the Senate version and not the House version. It'll probably find it and get you the right information. If you don't tell it that, it may not pull the right information. You and I know to do that. This is why we use tools like Accordance and BlueJay. They're a closed system that's also trained on all of the specific, the tax code, the correct regulations, and other primary sources. Of course, AI doesn't have professional judgment. It's going to just apply things mechanically. So NerdWallet went on to talk about hallucinations problem not being solved, the tendency to cite non-existent hallucinated cases in response to questions still comes up. We've said this before. OpenAI even did their own study and realized that the problem is the way they're training the models. They don't train, the model does not get a reward, if you will, for telling you, I don't know. It doesn't get a reward for telling you, I'm getting conflicting information, but I'm 75% sure this is your answer, and here's where I looked. It doesn't tell you that. So it's like a 4-year-old, it gives you an answer. That's a problem. That's a big problem, both for work we're doing in the office, but it's a problem for the client who the pinhead who's arguing with you, right? So citations can be indistinguishable from real ones unless you're familiar with cases, familiar with that particular case, or otherwise go do your due diligence and verify them. So what happened with the C question test? 3 of the 7 questions that NerdWallet gave these 3 AIs were from the C exam. They were not obscure trick questions. They basically represent minimum competency that the IRS established for us to represent taxpayers before the IRS. So they're a floor, not a ceiling of what you should know. AI performance was mixed. Not 100%, mixed. It can't reliably pass the test we already passed. Makes us the expert in the room, right? I said this to somebody on social media that was concerned where their clients were getting letters when they didn't give them the child tax credit this year because the parents had ITINs. And I said, listen, you're the most knowledgeable person in your relationship between you and your client. Remember that when you speak to them. So even the most advanced models that are available this year are doing an inconsistent job. AI, at least off-the-shelf, consumer-facing AI is not going to take away your job. In a single year, taxpayers willing to consider AI over a tax pro dropped 43% to 37%. That's still a third. Drops occurred in every generation surveyed, so this was a well-done, validly, statistically sampled survey. The driving factor in the research, the one big beautiful bill, the complexity introduced here, is making things more uncertain, not less uncertain. So let's see. Every generation breakdown across every age, every cohort, trust in AI has declined, which is interesting. The data reveals counterintuitive truth that better AI did not produce more consumer confidence. So the dark blue is 2024. The lighter blue is 2025. Sorry, 25 versus 26. And you can see millennials, Gen Z, Gen X, baby boomers, the silent generation. So every generation had a drop in its trust level. And interestingly enough, the highest levels of trust were millennials, the lowest levels of trust, boomers, and the silent generation. And that makes sense intuitively. Now, why is this meaningful? AI tools got better. They got smarter, if you will, measurably. Stronger recall, better at math, much faster responses, yet people are less trusting. The law got more complex, trust still went down. So complexity favors us, our knowledge, our training, your attendance at all those tax updates this year, your attendance here today. And NerdWallet said fictional filers in the test scenarios would likely have been just fine when they actually went to file because tax software or a tax professional involves information gathering and review processes that would catch the errors the chatbots didn't in just giving you a question. No one is saying, here's Schedule C, here's my P&L, fill it out. No one is saying that in this context to ChatGPT. All right. So for client conversations, always validate what's correct. Correct errors professionally. I don't, but you should. Whenever you can, say, let me explain to you where the misunderstanding is, because most of these answers, most of the time, are partially correct. My sister's 40% example was partially correct until it was the old law that was supposed to be in effect, and it was in effect until January 19th of this year. Then we jumped up to 100% on bonus depreciation. So we want to be polite. Use the moment, show the client exactly why it's different from the general rule or that the AI has the old rule, whatever it is, right? Don't make people feel too bad. AI got part of it right. Here's why you're different. And that's why I'm valuable, my nuances. Regardless of what tool generates the first draft of anything, we own the work product. AI has AI can't sign a return, doesn't have a PTIN, can't replace a paid preparer. AI can't be sanctioned, but you can. AI doesn't get sued, you will. AI can't represent your client, only, at least yet, right? Right now, only you can. So the gap is where we live. It's getting better at recalling what things say. It's not getting better at understanding the client's nuances. So we still need to master AI, but this was just a very interesting analysis and a very interesting study that I thought most of us could benefit from, at least to chat about. So it's a capable, I've said this, it's a capable first-year associate. They can do they have the training that they can do a large amount of work, and they're excited about it. But they may not get it right, and that's where we come in to take what they've narrowed down for us and make it right. It's not a future trend. All of our clients are using AI. Hopefully the future is they'll use a paid one or they'll use a better one, not just the free AI tools. Some of it will be sometimes partially right. Rarely will it be 100% right. And you're the practitioner of record. I like to say you're the smartest tax professional in your relationship with that client and their AI tool. Keep that in mind. Feel confident. Be polite. Save the date, for our 13th annual International Tax Conference if you'd like to join us. I hope to have registration up in a few weeks, and we'll be happy to have you join us. There'll be an early bird discount. I want to remind you, hard work will pay off eventually. Don't forget to set your clocks ahead on Sunday. Thank you all for joining us. And if you have any questions or you need to get a hold of me, by all means, please give us a call. We're happy to help. Have a great weekend.